Today we are delighted to have Dr. James Henderson, author of The Globalization of Russian Gas, Political and Commercial Catalyst. Dr. Henderson is also Director of Natural Gas Research Program at Oxford Institute for Energy Studies in the United Kingdom. Welcome to Redera.
Thanks very much. It's a pleasure to be here.
Fascinating book and very timely topic as well with the situation going on around the world with the virus. But Russian gas industry plays an increasingly global role, and Russia plays a global role as the global energy industry keeps evolving. And there are several themes going on, and I'll set the stage for you so then we can probe with one after the other. With the rise of liquefied natural gas, a lot of disparate markets that were once not connected have started becoming more interconnected. And also with the emergence of shale gas out of the United States, there is a huge new supply that has come in. And the European Union also is going through dramatic changes with decarbonization that is creating more demand for gas. And also the pricing mechanism is also changing. With all these things, give us the historical origin of Russian gas industry and its central planning time during the Soviet Union.
So, gas in the Soviet Union sort of first started to play a major role after the Great Patriotic War, or the Second World War, as we call it. And as we progressed through the 50s, but mainly into the 60s and 70s, gas was discovered in Western Siberia, or huge reserves going in Western Siberia, and trunk pipeline systems were built into the heartland of Russia, which is from Western Siberia towards the west. And I think that geography, that sort of west-facing nature of the pipeline system is absolutely critical in understanding the issues around the Russian gas industry now, because the infrastructure was constructed facing towards the west, towards Moscow, St. Petersburg, and the industrial heartland of Russia. And then when exports started, they began in the late 60s. That was a real cooperation between the Soviet gas industry and European steel pipe manufacturers, who were essentially providing the infrastructure to bring gas to Europe, initially via Ukraine, which obviously was part of the Soviet Union, and then ultimately through Belarus and Poland into Europe as well, by the early 1990s. So I think that essentially the infrastructure was constructed under the control of the Soviet Ministry of Gas, and there were a whole group of production associations and transport companies that ran the upstream and midstream of the industry. But the entire thing was flowing in one direction from Siberia to the west. And when the Soviet Union ended and obviously Russia became a country in its own right, but also, of course, some of the republics became countries in their own rights, with Ukraine being the most important. First of all, the Soviet Ministry of Gas became a public company, a state-controlled but company, a corporation called Gazprom, and it then took control of all the pipelines and the production, and also the pipelines within Russia, but of course the pipelines outside Russia, the export pipelines that went through Ukraine, Belarus, and elsewhere, suddenly became owned by those countries. And that obviously had consequences later on as well, because they were charging fees for transit, and also were also having to pay for the gas they were buying from Russia. So that was an interesting political context for later. But to come back to your original question, I think what happened was that one company came to dominate, a state-owned company, and became, if you like, the backbone of the Russian economy during a very, very turbulent time in the 1990s. Gas accounts for about half of all energy demand in Russia. It's vital in the power sector, it's vital in industry. And Gazprom was the company that provided that gas in the 1990s for almost no money. Non-payments were rampant in the collapsing economy of the 1990s. And Gazprom was not only providing gas effectively in many instances for free, but also was providing dividends to the government from its export sales. And that balance between domestic subsidization and export revenues is absolutely critical, because Gazprom essentially argued that it needed a monopoly of export sales in order to fund the subsidies that were being provided to the domestic Russian economy during a period of crisis. And that link between the export market and the domestic market is the linchpin of the book we've written. It basically, we explore how that link has changed over time and whether there is a continuing argument for that link in terms of Gazprom's business to be maintained, or whether the adaptation is going on both within Russia and outside Russia, which means that there is a process of change underway, and that as Russia becomes more and more important, we would argue, to the global gas market, whether that link between domestic and export markets is kind of makes sense going forward, or whether it's a kind of hindrance to progress. So yeah, I mean, where we are now is that we've been through a period in the 1990s where the domestic situation in Russia was very turbulent. Gazprom was the backbone, if you like, or one of the main backbones of both commercial but also political power, because its infrastructure stretches everywhere in Russia, and therefore if you control Gazprom, you essentially control energy to many, many regions and towns, which gives you a huge amount of political clout. But as we've gone through the 2000 and 2010s, things have started to change domestically, and things have also started to change in export markets, driven by internal factors in Russia, but also driven by external factors in the main export market, which you've alluded to, which is Europe. And that's really what we explore in the book.
Very well. In the book, you had a fascinating quote early on, and it says, in fact, much of the gas that was delivered was often not paid for at all. In 1998, the worst year, only 28.5% of domestically supplied gas generated actual cash revenue. That was directly from Gazprom, 1999. Fascinating. The central planning had its own roots, has its own challenges, but Russia always had this difficult time balancing in providing cheap gas to the local population so that there is enough stability and supply availability, but also giving the monopoly of export rights to Gazprom so that they can actually have a better rent management system to higher pricing. Tell us, what was the structure before the collapse of the Soviet Union, and then since then there's Gazprom, Novatek, and Rosneft.
Yeah, so essentially, during the Soviet era, everything was state planned, and there was a ministry for gas, and there was a ministry for exports, but essentially the state controlled everything under in a kind of pyramid structure, and so commands were given to produce produce certain amounts of gas, increase production. Export sales were negotiated through a centrally planned ministry. And the funds were received obviously into state coffers, and that, to be fair, did generate a huge construction boom, a huge development of massive gas resources in West Siberia, and created the foundation for an enormous gas industry. I mean, outside the United States, the biggest gas industry in the world, and certainly the biggest exporting gas industry in the world. So it was a massive business and a massive achievement for the Soviet Union. However, as we got towards the end of the 1980s, and in particular oil prices, but as a result, gas prices, because the two are linked, or certainly historically were linked, and Russia became a country in its own right, there were decisions to be made, and Gazprom, essentially under the leadership, under its sort of Soviet leadership, essentially stepped to one side and argued that, unlike the oil industry, which was split up into various companies, it should remain a unique entity because of the importance to the domestic economy, because you could not risk gas supply not being maintained to the domestic economy, because that would essentially bring the economy down. As I said earlier, gas accounts for 50% of total primary energy supply in Russia. So with that having been agreed and Gazprom having been formed, Gazprom then essentially took on the role as the dominant player. It wasn't the only producer of gas. There were other companies around. The oil companies all produced some gas with their oil. It naturally comes together, but they sold it all to Gazprom or flared it. And only gradually, and once we got through that 1998 crisis, which you mentioned, I mean, non-payments reached record levels, but that was the financial crisis of '98 when Russia defaulted, the ruble collapsed, and many companies went bankrupt. And so that was really the kind of the low point in the post-Soviet era, and it catalyzed the change of regime, which we saw late '99, early 2000 when President Putin came to power. But in the gas sector, that was the low point. Gazprom survived through government support, through its export monopoly, which continued to generate cash, which allowed it to basically suffer the non-payments domestically without collapsing. But once we were through that, another important thing happened. I mean, the argument for Gazprom, again, providing this subsidy to domestic markets was that it had inherited all its assets from the Soviet Union. And obviously in the Soviet Union, those assets were owned by the people. And so giving them to one company with shareholders didn't mean those shareholders should basically then start to reap profits out of assets that had basically been given to them. And so the people of Russia essentially were entitled, the argument went, to receive their gas at very low prices, and indeed sometimes not to pay for it, because essentially, the assets had been handed to Gazprom and had originally been owned, notionally by the people. However, by the end of the 1990s, that situation started to change because those assets went into decline, and Gazprom needed to develop new assets and spend money on them. And of course, then it needed cash, it needed money, it couldn't suffer non-payments for much longer. It certainly needed to generate money from higher sales and higher prices. And it argued that prices in Russia should, as the economic situation started to turn around, that prices should start to rise. Prices in Russia are regulated by the state to control what level Gazprom, as effectively by far away the biggest supplier, could charge. So Gazprom had to argue with the state about what level of prices should be, and it argued that the prices should rise to a level at which it could afford to develop new fields in the north of Siberia in a place called the Yamal Peninsula. And so prices did start to rise, but the natural corollary of that was that prices started to rise towards a level at which Gazprom's business could make money in Russia. So it not only could make money in export markets, but could actually break even, make money in Russia. And by 2008-9, we'd kind of reached that level. But of course, markets being markets, as soon as you reach a level where people can make money, you create incentive for others to start to take part in the business. And by the mid-2000s, it became clear which direction of travel we were going in. And so some of the oil companies, Rosneft in particular, and some other independent players, of which Novatek was at the forefront, there was another company called Itera, which was also trading gas domestically, started to develop a domestic gas business to initially not to compete with Gazprom, but to cooperate with Gazprom. The argument was, if we sell gas domestically, that frees up more of your gas, Gazprom, to go to export markets where you can make money. So we can help you by freeing up your gas. You can spend less money on developments, and we'll sell gas domestically at fairly low margins, and you can make lots of money selling to export markets. And that's what started to happen. And by 2010, 2011, this was quite a successful model. Gazprom was perfectly happy with it. But as regulated prices continued to rise and domestic companies started to make money, they decided to compete, and they actually went and undercut Gazprom in the domestic market and started to take market share. And by 2013, Novatek, Rosneft, and the oil companies were contributing, upwards of 35 to 40% of Russian gas supply domestically, to domestic customers. And Gazprom, was starting to get a bit concerned, but essentially these companies had proved that a competitive market domestically could actually help the Russian government, because it allowed them to really work out what the cost of gas in Russia should be, what the price should be, because until then there'd been no real pricing mechanism. It'd just been Gazprom saying, we need a higher price. But now there was competing supply, and the Russian government could start to work out what the real balancing price was. And they discovered that it wasn't necessarily what Gazprom was telling them, and that Gazprom, as a state monopoly with 300,000 employees and a huge business, wasn't necessarily the most efficient way of running a gas business in Russia. Whereas the participation of some smaller companies, or at least companies with smaller gas businesses, might be a better way of running things. And so, things didn't change dramatically overnight, but slowly these companies, Novatek and Rosneft particularly, started to take market share. And by the mid 2010s, each of them accounted for 15 to 20% of the market. And so we had a situation where Gazprom was coming down towards having only a 50% market share, having dominated with 80 to 90%, at the start of the 2010s. And so we had a dramatic shift internally in Russia. And then, of course, the question arose, well, if competition works domestically, maybe it works in the export market. And that was the kind of the next stage in the process, was that having moved on from the domestic market to say, well, should we start to apply this to the export market? And that's what we then delve into in the book.
With the rising prices internally, that created a kind of a internal market because of the independent suppliers. And I think at one point you said in the book there are 144 suppliers, even though Rosneft and Novatek are the other two leading suppliers. But each one has its own kind of source. Each one has its own kind of segmentation. And Russian internal markets, in many ways, even though there's a growing competition, is a regionalized market where many of these local companies are dominating in certain markets where virtually they are the only suppliers in many of the cases.
Yeah, that's right. I mean, with so much involving state companies in Russia, competition is a very kind of loose term. A lot of this stuff is managed with Gazprom, still owning and controlling the pipeline system. And, although there was notionally third-party access, in reality, Gazprom still had a lot of control. And you're absolutely right. I mean, there were many, many, many small companies who were trading or producing bits of gas for selling to local industry. Novatek and Rosneft stand out because they were significant in size. The other major Russian oil companies, to a larger or lesser extent, were also significant players, but there were a lot of small players as well. But as you say, the regionalization was driven by the fact that, so much of the gas industry in the world is affected by where the infrastructure is. And, moving gas by pipeline or via LNG is expensive. Mm-hmm. So if you can use it locally, then you can make more money. And so that's what occurred. So Gazprom was the dominant player across Russia. Novatek and Rosneft emerged as important players, but even they had regional focus close to their production base, but also just in various parts. I mean, Novatek, for example, became a dominant supplier in Sverdlovsk. So there were various parts of Russia. I mean, it bought a distribution company in Chelyabinsk, and so suddenly in these regions it became dominant. But the overall theme was that Gazprom was slowly losing market share, and these companies, as they gained market share, started to argue for a more liberalized marketplace. And because they needed to move gas around and they needed to have access to the pipeline system, they needed to know that if they had a customer for gas in, let's say, Chelyabinsk, they could move the gas from their production base, in Novatek's case, in West Siberia, to Chelyabinsk when they wanted to, and at a price that made it competitive to allow them to do that. And so they were increasing the pressure on the Russian government. And what they were also doing was saying, this is what is happening domestically, this is what we want to happen domestically, but also in Europe, things were changing as well, because the European Union was essentially almost going through the same process and saying, in a very aggressive way, we want a more competitive European market. And that was also affecting Gazprom because, Gazprom was a very, very large player, is a very large player in the European market. So on two fronts, it was facing these challenges, less aggressive in Russia because of its dominant position and its influence with the government, more aggressive in Europe, but essentially the challenge was coming on two fronts at that stage to react to markets that were becoming more competitive.
One of the key things you brought up in your book is the price discovery, one in the domestic market and the other in the international market. But domestic market price discovery has been a challenge for the industry and for the government. There have been several attempts to kind of create a marketplace, an online marketplace, or like an exchange, but those efforts have not always been successful. Can you give us a little bit of overview of what happened with the St. Petersburg Exchange?
Yeah, I mean, essentially, the Russian government, particularly the Monopolies Commission, has, as part of its role, been focused on trying to find a mechanism for establishing what a market price for gas in Russia would be. Once it became clear that there were competitors who could undercut the regulated price, which Gazprom is mandated to charge. Gazprom has really very little flexibility. There's a slight window around the regulated price, but effectively it has to charge the regulated price. So if someone undercuts it, it loses market share because the customer will move. And once it became clear that there were companies prepared to do this on a regular basis, and indeed to price their gas effectively at a fixed discount to Gazprom's gas, then it became clear that there needed to be some kind of system to work out what the right price, right being the price that balances supply and demand in Russia, was. Initially, Gazprom offered to do this and set up its own trading platform, but obviously that was seen as having significant conflicts of interest with its own business. So no one was really wanting to trade on Gazprom's platform. And so the Spymex platform, which was already trading oil, volunteered to set up a gas exchange. And the idea, the theoretical idea, is a very good one. But the problem it ran into was that as soon as you started to implement the rules to set up a fully liberalized market, within which you could trade gas freely, you suddenly realized that there were an awful lot of parts of the value chain you had to alter, which would have significantly changed Gazprom's business. To give an example, if you're trading gas on the St. Petersburg Exchange, you need to be able to not only buy and sell it once, but to be able to buy and sell it multiple times to create a market. If I've got too much gas, I need to be able to sell. If I've not got enough gas, I need to be able to buy. But my position is constantly changing, and I also need to know that when I buy and sell, not only are there people out there to trade with, but also that I can actually move the gas to them. And therefore you need a liberalized transport system to allow you to be able to move gas to customers as and when they need it, but also to trade with multiple parties. Now, this wasn't happening because Gazprom, although there was third-party access to the transport system, wasn't flexible enough to allow that kind of access to the transport system, because it was moving big amounts of gas around Russia to satisfy both domestic and export demand.
And all the pipelines are owned by Gazprom, so they have obviously a final control.
Indeed. Well, I mean, they have final control. Under the law, they have to offer access to other people, but of course they can manipulate how they give that access, because they can always argue that the pipeline's full, or there's no room in the direction that you want to go, or whatever. So yes, they essentially control the pipeline system. So as soon as you started to create a gas exchange, it quickly became clear that you had to start liberalizing the whole system. And ultimately, because in order to make any trading system work, you need volumes of gas to trade, essentially Gazprom was being forced to sell gas on the exchange that it didn't really want to sell. It didn't want to create competition. And then you got into a situation where you're thinking, well, to make it work properly, you kind of have to break Gazprom up. And that was never really going to happen. So the exchanges worked to an extent, in as much as volumes are traded, but because no one was prepared to really confront the dominance of Gazprom in the domestic market. And to be honest, a number of the other players were also actually happy with the status quo, because they were making money by just selling gas at a slight discount to Gazprom's regulated price, and didn't necessarily want competition either. The concepts that started to fade. I mean, it is there and it does set a price, the Spymex Gas Exchange, but it's not been the dramatic success that some had hoped 2 or 3 years ago. And it hasn't really become the marker price. The regulated price in Russia is still the dominant price, and the price that most customers will use to negotiate contracts.
So the regulated price still determines by and large the pricing in the internal market. Now moving on to the external market, which is the international market, geography does matter in this situation, and there Gazprom and Russian gas has two markets. First, Western Europe or European Union, and the second, Asia. Let's take European Union. How Russia or Russian gas in European Union have been linked. And most people, those who do not know it, Russian gas play a huge role in the European Union. I think at one point they're 1/3 of the total import of the European Union gas. But tell us how European Union over the years has become more and more reliant on the Russian gas, and why.
Well, initially, as I said, it was a kind of a trade, if you like, of steel and pipe for gas, which kind of in a post Second World War environment kind of helped to underpin relations really between Europe and particularly Germany and Russia, which had been at war 20-25 years previously. And so there was this new strategic link developed in the late 60s and early 70s, and gas became a more popular fuel for industry, slowly for power generation and for residential use over the 70s and 80s. And Russia just has vast amounts of gas sitting in very large fields, which are quite cheap to develop. And the relationship became symbiotic, if you like. I mean, Europe had a growing demand for gas, and Russia had a growing demand for revenues, and hydrocarbons were the way of providing those, and gas and oil were the obvious ones. And so over time, demand and supply could grow hand in hand. And because Russian gas is pretty cheap, it can be very competitive with alternative sources. So, there is gas in Europe, in Norway particularly, in the UK there was a lot of gas, Denmark, Holland, and in the 1980s, 90s, the domestic production, indigenous production in Europe, and production from Russia and other sources, North Africa, were growing hand in hand, and there was a nice balance. By the time we got to the 2010s, LNG is very much coming into the frame, but LNG is a sort of marginal fuel in Europe because it tends to go to the premium market in Asia first and then come to Europe as a second choice. So, but nevertheless, LNG was entering the market. But I think most importantly, indigenous production in Europe started to go into decline, particularly in the UK, to an extent in the Netherlands, certainly in Denmark. Norway has managed to maintain its production, but overall, the growth in demand outstripped the growth in supply. So imports to Europe started to rise. And as they started to rise, Russia was an obvious place to fill any gap. So, Russia, with its size of reserves, with its pipeline infrastructure that was becoming larger and larger, became an increasingly important source of energy, and particularly gas, for Europe. Now, this was kind of fine while relations were friendly, but once we got into the 2000s, the issue which I alluded to earlier of transit through Ukraine started to rear its ugly head, because the balance of power between Ukraine and Russia was interesting to observe. I mean, clearly Russia regarded Ukraine as something of a vassal state, as it had been under the Soviet Union. The Ukrainians, of course, though, control the route through which so much Russian gas arrives in Europe, and also buy Russian gas. And there was a kind of annual negotiation. What price should Ukraine pay for gas from Russia? What price should Gazprom pay for transit of pipeline gas through Ukraine? And in addition to that, there was an awful lot of corruption around the revenues that were being talked about. And this tended to cause an annual, sometime around December, heated debate, which often led to the negotiations coming very close to the wire by the end of the year when the contract needed to be renewed. And in 2 years, 2006, and then particularly in 2009, negotiations broke down. And in 2009 particularly, there was an interruption of supply, and it suddenly became clear to Europe that how much it then depended on Russian gas, because in the middle of winter, countries in Central and Southeastern Europe suddenly had gas supply cut off for a period of about 2 weeks. And people were getting very, very cold. And it suddenly became clear that this was no longer acceptable. And at the same time, relations with Russia had, somewhat deteriorated politically. And so there was a big drive in Europe to, it decreased the dependence on Russia, but at the same time, two, to create a market system that created competition to allow a region that is inherently an energy importer, it just doesn't have enough of its own energy, to be able to access multiple sources of supply at the most competitive price. And this is when the third energy package, as we know it, the legislation that introduced competitive energy markets in Europe, started to be developed and enforced. And that was the moment at which Gazprom faced this kind of significant competitive challenge in Europe to its standard business model, which had been long-term contracts and gas priced as it had been in so much of the world, priced relative to oil. And so you would have a long-term 30-year contract between buyer and seller, with the gas price essentially calculated as a percentage of the oil price. And what the European Union did was say, no, we want to change that so gas competes with gas in Europe, and also you can buy gas on a spot market as well as under contract. And so therefore there can be much more competition, much more availability of alternative sources for consumers. And Gazprom was significantly threatened by that change.
And who were the alternative sources for European Union then and now?
Well, the alternative sources actually, to be honest, haven't changed that much. They are Norway, they are Algeria, other sort of gas from North Africa, but now, I mean, they were then and they are now the global LNG market. So it is LNG from Qatar, LNG from Africa, from Nigeria, LNG from Trinidad. But of course, this LNG goes to a global market, so it will go where prices are best. And so it's not gas that is necessarily definitively directed at Europe, but it's available for European customers to go and compete for. So this is where the kind of globalization concept of Russian gas comes in, because Europe does have a significant amount of regasification capacity. Now, regasification capacity is plants where LNG can arrive and can get turned from its liquid form on ship into gaseous form, and then put into the pipeline system. And you need capacity to be able to do that in order to supply gas in. And there is a lot now of regasification capacity. In fact, there's so much regasification capacity that you could replace all of Russian gas imports into Europe with LNG if you so desired and were prepared to pay the price. So there's a lot of capacity. So LNG has now become the major source of competition with Russian gas. And as the third energy package was developed and Gazprom was forced to compete and to start to change the way its contracts were priced, and it had to remove various other clauses. I mean, for example, there was something called a destination clause, which meant that if you bought gas under long-term contract, you could not resell it. And of course, this gave the supplier a huge amount of bargaining strength, because he could ensure that there was no way that a customer who had bought too much gas could resell it. It was just bad luck, and you had to find ways of managing that. Once those destination clauses were removed, and the European Union insisted that they would be removed, again, the sources of competition suddenly became all your customers as well, because your customers could buy gas and resell it, and trade amongst themselves.
Secondary market.
Well as, sorry?
The secondary market.
Exactly, yeah. And they could trade with themselves, amongst themselves. They could trade with all sorts of LNG suppliers who had spare LNG on multiple timescales of contracts, from spot, 1 year, 2 year, 5 year. So people could start to build portfolios of gas. And they were also finding they could trade gas not relative to oil, but just in a market environment, depending on what supply and demand priced gas at. And so Gazprom found itself in a very difficult position where it was still a dominant supplier, but where its customers were challenging it, not just commercially, but in the courts, and saying, you're now breaking competition rules in the European Union, and you need to change the way you are selling this gas. You need to change the way you operate. And indeed, the European Commission challenged the competition authorities in the European Union challenged Gazprom in 2011 in fact, raided its offices to gather evidence that it was breaking competition rules. And there was an extended period where this investigation was going on. But ultimately, Gazprom, over time, was forced to change the way it did its business in Europe. I mean, ironically, it fought against this, but a number of us were saying at the time, and it's now been proved, actually the changes were not that bad for Gazprom, because Gazprom did have a very strong competitive position anyway, because it had low-cost gas and an asset base that had been largely depreciated, and so it could afford to compete.
Exactly.
And what has happened, of course, since it's been forced to compete, is that it's done rather well. But at the time, it was very, very resistant to change in the European Union, and so, as I mentioned earlier, it had sort of battles going on two fronts, both domestically, where it was kind of fighting against new and emerging competitors, and in the European Union, where it was fighting against this regulatory process that was forcing it to change the way it did its business.
How does Gazprom bring the gas to the European Union? Obviously, there were three pipelines, one through Ukraine, the second through Belarus, and the third one was the pipeline, I think, connecting Germany. But then since then, there has been Nord Stream 1 and 2, and there has been also Turk Stream.
Yeah, so the main route was through Ukraine, and the Ukraine system sort of diversifies off in various directions down. I mean, the main one goes through Slovakia, but it goes down through Bulgaria, and it also goes up through Poland, then and into Germany. So the Ukraine system targets Germany. The Yamal Europe pipeline goes through Belarus and Poland into Germany. And those were the two main pipeline routes into Europe. There's a line into Turkey called Blue Stream, which just goes directly from southern Russia into Turkey. And essentially what happened was that over time, Russia realized it was becoming increasingly reliant on the Ukrainian system, which was carrying, up to 120 or 130 billion cubic meters a year of Russian gas out of a total of, at the time, about 160 BCM of exports. So it was taking 3/4 of Russian gas to Europe at the time. And when these crises happened in 2006, 2009, Russia decided that it needed to diversify its export routes. Now, obviously, the Ukrainians fought against this because they needed the revenue, but Russia decided to build new pipeline systems. And first of all, it constructed Nord Stream 1 across the Baltic Sea directly to Germany, and got approval for that because the European Union was happy to see a diversifying pipeline route that alleviated some of the problems around negotiating with Ukraine. Then Russia took it a next stage and decided it was going to build a southern route from southern Russia into Bulgaria, called South Stream. And at this point, the European Union got slightly concerned that Ukraine was being undermined too much. And of course, then we had the annexation of Crimea and the kind of war in eastern Ukraine and the sanctions that were then imposed. And the European Union reacted by using the third energy package to say, okay, well, if you build South Stream, you've got to apply all our rules to any onshore pipelines that come from South Stream. You have to offer third-party access. You have to essentially allow others to use the pipeline, not just use it for your own gas. And that ultimately put Gazprom off because it was spending a lot of money on a pipeline it possibly could only use half the capacity of. So South Stream disappeared, and there was ongoing debates about whether Russia should be allowed to build new export infrastructure to undermine the Ukrainian transit route. Ultimately, it replaced South Stream with a line to Turkey called Turkish Stream, not surprisingly, which provided gas to Turkey that would otherwise have gone through Ukraine, and also has now provided extra gas that looks like it's going to go through Bulgaria and Serbia and Hungary into Austria. And will abide now by, Russia has accepted it will have to abide by third energy package rules, so there will be third-party access offered. So it's building this new pipeline, and in addition to that, it has decided to double the capacity of the Nord Stream pipeline from 55 to 110 BCM by building Nord Stream 2, and that pipeline, Nord Stream 2, has been the subject of a lot of political, not intrigue, but a political debate. I mean, essentially what's happened is that because Russian gas is cheap enough to be really one of the low-cost suppliers to Europe. All the competition rules that have been applied by the European Union have worked in a sense that they have forced competition. But when you have competition, obviously, customers have the right to choose whatever supplier they like. And no great surprise, they choose the low-cost supplier. And Russia just happens to be one of the low-cost suppliers. So in the competitive market, Russian gas has started to increase its market share, and volumes have gone up dramatically. They reached a record level of over 200 BCM in 2018. It was slightly lower in 2019 because demand fell a little bit, but still very close to 200 BCM, up from kind of 130 BCM at the start of the decade. So a huge increase in volumes. And so although diversity is still an option, because in a competitive market you could buy the LNG if you wanted to, what's happened is that the Russian market share has gone up to sort of 35, 36, 37%. And that's not been politically very acceptable, especially in a world where Russia-Ukraine issues have dominated the political debate. So the infrastructure, the only way of stopping Russian gas getting even bigger market share has really been just to stop the pipelines. And so, Nord Stream 2 has become a focal point of stopping infrastructure being built to stop competitive Russian gas, even more Russian gas coming to the market. And sanctions have been applied, particularly by the US, in the light of the Ukraine crisis. And although the pipeline is near completion, it's only about 120 kilometers yet to be built. Essentially, the sanctions have stopped any Western companies being involved now. So Gazprom is having to finish the pipeline itself, and we'll see in the next few months whether it manages to do that. But essentially, these pipelines have become the focal point of the debate, not only about how to punish Russia for its actions in Ukraine, but also how to limit potentially Russian market share in Europe.
The political troubles that were centered around Ukraine and Crimea helped Russia to pivot back to Asia, and as a result there is a development in Siberia, and there's a Siberian pipeline, and then now there are new markets that Russia is pursuing, first China and then Korea, Japan, Taiwan, and then India. How that is helping Russian gas industry, and specifically Rosneft or Gazprom?
So the shift to Asia has been a kind of ongoing strategy for some time. Yeah, I mean, absolutely, the Ukraine situation and Western sanctions have catalyzed, further acceleration of it. In the oil sector, the oil pipeline to China was built in 2009 and has been running successfully since then. The gas pipeline has taken longer to negotiate because gas demand in China has been slower to materialize. Obviously, it's growing very fast now, and the Power of Siberia pipeline from East Siberia into northeast China was completed in December 2019 and is now flowing gas. And that's given Gazprom, as the pipeline export company, a vehicle for getting gas into China. Initially, the idea was to send the gas to the Pacific coast as well as to China, and to create an LNG plant to allow diversity of sales, but that didn't work economically. So Gazprom has diversified, but only to one country in Asia, and that is China. And this is where the debate gets interesting, because as a pipeline company, Gazprom always has the strategic risk that your pipeline obviously goes from A to B and creates a strategic link, which is a positive political statement, but also can create political problems if one party starts to dominate. Now, in this case, Russia's always been very nervous about being the hydrocarbon supplier to a rampant growing Chinese economy. And essentially that's what Gazprom has become. I mean, it's now totally reliant on these sales to China. And, we've seen actually in the last couple of months what happens when the Chinese situation changes. I mean, with the coronavirus, demand fell, and after only a couple of months of operation, Russia was asked to perform maintenance on the pipeline, but in effect was being asked to shut down the pipeline because there wasn't demand for the gas. So already it's become clear what dependence on China may mean in future. And, the only way to avoid this dependence is to get involved in a market that is more flexible and has a greater range of options. And that is the LNG market. And this is where the Russian export strategy and Gazprom's export strategy diversify,
Hmm.
and the needs of Russia are to have a diversified portfolio of pipeline exports and LNG exports. And the interesting thing is that Gazprom has not been the vehicle to provide that second leg, the LNG leg. The history of Gazprom and LNG is a long and tortuous one. It has tried to develop projects in the Barents Sea. The Stockman-Skoye field was a long-running project through the 1990s with various Norwegian and American companies that ultimately came to nothing. It has tried to develop projects in the east, in Vladivostok. It does run one LNG project in the Far East on Sakhalin, but that project was controversially, essentially Gazprom took a 50% share. It paid for it, but it took it from Shell and a consortium of Japanese companies who had developed the project, and Gazprom just insisted on being the operator. So it does have one project, but it didn't really develop it, it just took it. And it demonstrated over time that it wasn't really, I mean, as a pipeline company, it has a certain kind of DNA, if you like, for developing big gas fields, large pipeline infrastructure, but it doesn't have any experience in LNG. And by 2012, 2013, it became clear that Russia's export strategy needed to have this second leg. And other companies, particularly Novatek and Rosneft, came forward and said to the Russian government, look, Gazprom is not the company to do this. It's clearly demonstrated it's not capable. And we think we are, so give us the opportunity. And so the Russian government essentially broke Gazprom's export monopoly just for LNG, and initially just for specific projects. And there was a very tight definition of projects that were either owned by state companies, namely Rosneft, or projects that had LNG written into their license when the license was allocated, and that's when Novatek's projects on the Yamal Peninsula. And Novatek took the bull by the horns and developed the Yamal LNG project, and did so remarkably efficiently, not just for Russia, but for the world. I mean, 2013, it took its decision, and it said by 2017 we'll be producing LNG, and by 2017 they were producing LNG on time and on budget, and it's been a dramatic success, and it has demonstrated to President Putin that there are other companies out there who can benefit the Russian export system in gas other than Gazprom. And he has now thrown his support behind Novatek developing more projects. Rosneft does have a project. It's taking a lot longer to get going, and Rosneft's got other problems. But it's interesting that Russia's gas strategy, export strategy, now involves two companies, one which still has the pipeline monopoly, but a second which I think you could certainly say, and we do say in the book, that Novatek has become Russia's LNG champion. So it's a private company. Yes, it has big connections to the Kremlin, very friendly with the Kremlin, but it's not Gazprom, and it is the dominant LNG player in Russia.
Novatek's LNG success has been enormous, especially the Russian government itself giving lots of benefits and making almost the ship port operation almost free for Novatek. But at the same time, Novatek also did some phenomenal development in time and on budget.
Yeah, I mean, I think that as with all these big energy infrastructure projects, there's always a strategic element to it. There's always a political element to it. And, you know, in Russia, that's writ large. And I think the thing about Novatek is that they managed to persuade the Russian government that, one, LNG in the north would help with the development of the northern parts of Russia in terms of their economies, which were very backward. So we're talking northern parts of Siberia, but also talking northwest Russia around Murmansk, which had historically been naval shipyards, had gone into kind of disrepair as the kind of Russian military and had gone into decline in the post-Soviet era. And Novatek provided engineering and big infrastructure projects to redevelop those northern areas. And that was a big tick, and it got initial support. Certainly the Russian government helping to pay for the port at Sabeta and the dredging of the Ob Bay where the LNG project is. And I think the other strategic element around these LNG projects is that they are in the Arctic, and they are using the northern sea route, which Russia dominates the geography of the northern sea route. its shoreline accounts for about 60% of the Arctic coastline. The other countries involved obviously are Canada and the United States, Norway, and to an extent Denmark via Greenland. And this development of the Northern Sea route is a huge strategic priority for President Putin. He sees it as one of the big geopolitical bargaining chips that Russia has. Certainly in negotiations with China is absolutely vital, because the Chinese are very keen to get another shipping lane to Europe. And using hydrocarbon projects, particularly Novatek's LNG project, to develop or provide the reason for developing an icebreaking fleet that is second to none in the world. I mean, Russia dominates the global icebreaking fleet. It has as many icebreakers as all the other countries in the world put together, and is developing powerful nuclear icebreakers to break through the ice in all seasons. This has been catalyzed by not only Novatek but by other oil companies in the north, but Novatek's projects is the most obvious. So again, another reason for government support. But then, added to that, the way things tend to work in Russia is that you go to the Kremlin and you say, I can do this, and these are the benefits for Russia, and you get support, and then you have to deliver. And if you deliver, then you get to do another project. And Novatek has undoubtedly delivered in a way that Gazprom failed to. And when the Yamal project was opened, President Putin was there and gave huge plaudits to the Novatek management for their achievements. And now they are taking on new projects and developing an export business that, by 2030, if they meet their targets, could well start to rival Gazprom's export pipeline business. It won't be the same size, but it'll certainly be very, very significant. And so you are seeing this new trend in the Russian export strategy, which is a two-company rather than a one-company strategy.
Exactly. So Gazprom is two areas, one internal and the other external, both in the LNG front. Indeed. Moving on to China, and talking about some numbers, people underappreciate sometimes how expensive it is to move gas, even on pipeline, because most of the gas that would come would have to be moved large distances across China. And the original thesis was that if the natural gas prices in Asia were around $8 or more than $8 millions of BTU, it would be acceptable. But since then, prices have collapsed considerably, and it's going to be a huge economic challenge for even Gazprom to make that project viable, especially after spending $55 billion in building the pipeline.
Yes, it is. You're absolutely right. I mean, I think what we're seeing at the moment is exaggerated, of course, by the economic slowdown caused by the COVID-19 virus. But Gazprom's initial contract was an oil-linked contract, which looked reasonably competitive with LNG prices when the gas started to flow, but increasingly is uncompetitive. And when demand declines, as it's obviously doing right now, well, not declines, but when in China demand growth has slowed dramatically, you have a problem, because you've only got one market and nowhere else for your gas to go, and this is a big issue for Gazprom. And I think going forward, I think the gas market in China is going to grow further. I think there will be room for Gazprom's gas over time, but the price will probably have to be renegotiated. And I think thoughts of second and third projects, although are going to be subject to significant commercial negotiation and competition. So it's going to be a more difficult market than I think Gazprom had hoped. So yeah, it's a problem for any pipeline company which has this single point market, and that is Gazprom's competitive problem, is that it's the bulk of its sales are into a European market, which is now very competitive, and its other pipeline sale is into a country which has a very, very strong bargaining position, because China has done a great job creating a diversified source of supply from Central Asia, from Myanmar, and lots of LNG plus Russian gas. So Gazprom can't hope to negotiate from a position of strength. They're negotiating in a very competitive market, and that will always be a problem. China is important to Novatek, but it's not the only market. It can sell its LNG anywhere, and that allows it to at least consider its options when it comes to deciding where to make money. Gazprom doesn't have that choice. It's China or nothing.
Am I correct in my understanding when I said that even if China pays $8 millions a BTU, after deducting all kinds of costs and especially $3 to $4 of transportation costs, the Gazprom may only get about $1 or just near $1 per millions of BTU, which puts Gazprom in a very difficult situation.
Well, I mean, I think it's the cost of transport from the Russian border. It depends where the gas is going in China. If it's going all the way to Shanghai, then you're paying $3 an MMBTU to get to Shanghai, but you're paying less to get into northeast China and to Beijing around the Bohai Bay area. So it depends where the gas is going. But certainly at current gas prices, Gazprom would get very, very little. I mean, if China paid $8 an MMBTU, then no. I mean, Russia would get, at the border, Russia would get $5 or $6 an MMBTU. By the time it gets back to the wellhead, Gazprom owns the pipeline, but if it charges a notional tariff, then back to the wellhead in East Siberia, you're talking probably another $1.50 to get back to the wellhead. So your 5 then becomes 3.5. So it's they can make a margin if China pays 8, but China's not paying 8 right now for LNG, and probably won't pay 8 for LNG for some time. So I think that's the problem. But the point you make is valid, which is that the transportation costs in China are significant and do detract from what China would be prepared to pay at the Russian border. It's one of the reasons why the plans for a second pipeline, which Russia wanted to build from West Siberia into the western province of Xinjiang in China, close to the Central Asian border, doesn't work, because then the transportation costs across the whole of China are very significant. They're more like $4 or $5 an MMBTU. So by the time you've got to Shanghai from the western border of Russia and China, then you really are talking a net back at the Russian border, which is very low, and that doesn't work, or hasn't worked so far. So the transportation costs inside China are not an insignificant problem. That's absolutely right.
But then also it leads to another question. That's just the tough economics for Gazprom, but virtually there is no money for Russia. And that becomes a real issue for Russia, because Russia is using or would like to have more exports and thereby create more revenue for the state.
That's true, yeah. I mean, it's less of an issue in the gas sector, because the gas sector has never really generated that much revenue for the state per se. The oil sector is where the revenues are really generated. But at a time when the Russian budget was being funded, I mean, now it's about 37-38% of revenues in 2019 came from oil and gas. Historically, it's been as high as 55, and even at that stage, 45% of the 55 was coming from oil, and only 10% was coming from gas. So, but you're right. I mean, it doesn't help. There's an export tax. 30% of the sales price gets paid as an export tax to the Russian government. So obviously, low prices, low profits don't help the Russian budget. That's for sure. But as I say, it's less of an issue in gas than it is in oil.
Last question. How do you see the current virus related economic conditions around the world, especially in China and also in Russia? And this industry has taken a double whammy. One, the oil prices are historically low, and on top of the economic activities are not likely to rebound in the foreseeable future. How does the Russian gas industry in Russia adjust to it?
Well, I think that in terms of the challenges to the Russian gas industry are short and long term. In terms of the virus, the gas sector overall is going to feel a hit from the slowing economic activity. There's a very tight correlation between gas demand globally and GDP, and therefore, Russian gas is going to feel a hit because its major market in Europe is going to see an economic slowdown, or is seeing and it'll have to adapt, and it's being forced to adapt now. Volumes will go down, prices are low, and Gazprom will have to compete and accept that it may have to shut in production and accept lower volumes for a period of time. But our view is that over time, when economic activity starts to rebound, gas demand will rebound, and I think it will not be a bonanza time for Russia, but it'll be okay. I think the bigger challenge in Europe is around decarbonisation, and then there's a question about whether the current crisis will slow the decarbonisation trends in Russia, or whether we will see an acceleration actually, because governments will spend their way out of an economic slump by investing in green energy. That is an open question. We don't know the answer to that, but Gazprom's position in Europe and its volumes of gas sales will very much depend on how fast Europe decarbonises. So I think short term, there's a hit over the next 12 to 18 months because of the virus. Then there's a rebound, and Gazprom, as a low-cost supplier, is well placed to see its volumes rebound. Longer term, decarbonisation is a big challenge. In Asia, I think the question is really around the one you raised earlier, which is how competitive can Russian gas be relative to LNG as the Chinese market grows again. I mean, we're not seeing a decline in gas demand in China this year. We're seeing slower growth, and that growth should continue and probably accelerate in 2021 and beyond as the virus ultimately comes under control and economic growth starts to accelerate again. But the question for Russia is, is it competitive enough with LNG? And is it Gazprom that benefits, or is it companies like Novatek that have LNG to offer and can be more flexible around prices? So I think, again, short-term issues around volumes and prices. Longer term, the challenge is, can Gazprom adapt to a much more competitive marketplace, global marketplace for gas, in a world that is where questions around economics and also questions around security of supply, as countries get more concerned about generating domestic growth rather than relying on imports, come to the fore. And I think, as we see China develop, gas clearly has a role to play in fueling the economy, in helping to clean up the air by displacing coal. But the Chinese may be becoming increasingly nervous about relying on imported sources of energy. So again, in a different way, may decide to accelerate domestic production, may decide to accelerate domestic renewables, and gas may be, imported gas at least, may be disadvantaged. So there is these short-term challenges around the virus, which are certainly there, but then there are the long-term challenges, and I think what the Russian gas system needs to be able to do is to adapt very well and be much more flexible. And I think the question for Gazprom is whether it has the capability to be flexible, or whether LNG and Novatek and others become that level of flexibility and therefore become much more important to the Russian gas system overall. So I think that the challenge for Gazprom is whether it becomes a bit of a dinosaur, a pipeline dinosaur in a world that is becoming increasingly reliant on flexible sources of supply and LNG.
Do you think the cost of shipping, or the maybe some improvements or dramatic improvements in technology for the LNG shipping also alters the dynamic between the U.S. shale gas producers and other LNG gas producers? Because right now Russian gas or LNG gas or pipeline gas with the U.S. shale gas is really, they're not competitors. They're all suppliers in different markets. But will that change?
Well, I think the problem for US gas at the moment is that it's just too expensive relative to prices in the global market. Now, going forward, the question is whether the balance of prices in the United States and prices in Europe and Asia will allow US LNG to become competitive again in the way it was a couple of years ago, and really change the way the market operates. At the moment, the situation would appear to favour those that are close to market and have infrastructure already in place. And so Russia, I think, is favoured over US LNG in both China and Europe in the short term. But I agree with you, in the longer term, I think there are questions around how the economics will shift, and whether US LNG, and indeed other sources of LNG from Africa and from Australia, and particularly from Qatar, will really challenge the pipeline suppliers. Issues around transportation costs will be part of that equation. Issues around upstream costs will be part of that equation. And I think it's a very, very interesting situation, because Europe, where Gazprom has its biggest market, is the market effectively of last resort for LNG. When LNG doesn't have anywhere else to go, it can't find a market in Asia or other premium markets which tend to pay higher prices. It comes to Europe because it can always find a market. There is a liberalized market and it can always get sold, and there's storage as well in Europe, which is very important. And so Gazprom is always competing with, if you like, the lowest cost LNG, or the LNG of last resort that's desperate for a market. So it has to be able to essentially price itself at a level that can compete with that marginal LNG. And as a result, the issues you raise around what the costs of transportation are, but also what the costs of LNG fundamentally are going to be critical going forward. And the fact that Gazprom doesn't have that much flexibility, in as much as all it can do is send gas to Europe or not send gas to Europe. It can't send gas anywhere else, really. Its European markets and Chinese markets are not connected in any sense. Leaves it in a difficult situation. I mean, it has lots of advantages in terms of low-cost gas and infrastructure in place, but what it doesn't have is much flexibility. And I think that going forward, in a world where hydrocarbons are fundamentally under pressure, in a world that is looking to become to reduce carbon emissions, and also in a world in which LNG is providing increased levels of flexibility and globalizing the gas market, leaves Gazprom in a difficult position. Russia is, I think increasingly Russia and Gazprom are diverging. I mean, there used to be a great saying in Russia that what is good for Gazprom is good for Russia. Increasingly, that's just not the case anymore. What is good for Russia is a more diversified gas export system, which involves Gazprom as one element, but also involves others who can provide that flexibility. And I think that is Gazprom's fundamental problem.
Thank you. We have been speaking with Dr. James Henderson, the author of The Globalization of Russian Gas. Thank you very much.
Thanks very much indeed. It was a pleasure.